All right. So a lot of y'all are still confused, and I do not know why. I'm not teaching y'all a million different things. I'm not saying look for that, look for this, look for this, look for that, and wait for this confirmation, blah blah blah. I'm literally only teaching y'all two different things: market structure, supply and demand. These are the basics of trading. Everybody got to know these. And supply and demand can also be called support and resistance. So literally, these are the basics of trading. If you don't know these, then you should not be trading because these are the basics of trading. So here I got a few examples. You should clearly know how to read the market and look at the market. If you don't know what you're looking at, then you shouldn't be trading. Um, or you shouldn't be taking a trade. You shouldn't be doing anything until you find something that look familiar. It's just that simple. Why is you forcing a trade when we get paid literally just to wait? You literally wait for the market to come to you, give you something that you familiar with, and then you execute. So literally, the market can only go three ways. We only trade two of them. So we only trade when the market is in an uptrend, and we only trade when the market is in a downtrend. We do not trade consolidation. So when we're in a uptrend, we make higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. So when we're in the uptrend market, it make higher highs and higher lows. And when we're in the uptrend market, it also leaves something behind, what we call a demand zone. A demand zones are basically telling us that the buyers are in control, that they want the market to go up. So all we doing is waiting for the market to pull back to these zones to go higher. So market structure is to tell us which way the market want to go. Demand zones are to tell us where to get in at, and that's it. Um, and then consolidation, we not doing anything until the market tell us what it want to do. So we wait for the market to tell us what they want to do, and then when they tell us if we want to go up or down, that's when we finally take our trade. And then lastly, we have a downtrend. The market make lower lows, lower highs, lower lows, lower highs, lower low, lower highs, lower low. So in a downtrend market, it leave behind supply zones. It's that simple. How do we know if the market want to continue going higher? It make higher highs and higher lows. The previous, so the new high right here should never, it would never break this previous high. It's gonna always be above, and then this low right here will always be above this last low. So that's how we know that the market want to continue going up, because this new low never broke below this last low. So in the uptrend, we make higher highs and higher lows. If we do anything outside of that, it's a possibility that the market want to go the opposite way. It's just that simple. So in the downtrend market, it make lower lows and lower highs. So as you can see, this low is lower than this previous low, and then this high is lower than this previous high. If it go above this high, it's a possibility that the market want to go the opposite way. It's just that simple. Okay, so in the downtrend market, we find or we look for supply zones. In a uptrend market, we look for demand zones. And a lot of times, y'all send me y'all screenshots looking over y'all trades. I do not know what I'm looking at. Um, Clearly, y'all lost. Y'all don't know what y'all doing, or y'all basically finding videos y'all see on YouTube. Um, and I don't trade that way. I don't teach that way. I clearly know when y'all doing something I'm not teaching or I never talked about, because I only talk about market structure, supply and demand, liquidity, and that's really it. Like I literally only talk about market structure, supply and demand, um, and liquidity. That's literally it. I don't talk about nothing else. So when it come to fundamentals, that just checking the news. That's every trader should do that. Technical analysis, that just market structure. Um, and then find your POI. It's literally supply and demand. Wait for your market to hit your entry. I mean your POI. That's just basically where you waiting for the market to hit your zone. Where you like, okay, once it comes to this level, I'm looking for it to sell down or I'm looking for it to buy up. So when you looking for your POI, you literally looking for a supply zone or a demand zone. So when it come to and then once it hit your zone, you wait for a breaker structure and change the character. That is market structure. And then lastly, you find your entry. That's a supply or demand zone. So it's literally the exact same thing over and over. Market structure, supply and demand. Market structure, supply and demand. So right here we had higher high, higher low, higher high, higher low, higher high, low. Then we had this higher low right here. All these are like higher lows. So let me put this right here. Uh, so boom, higher low, and then you had a higher high, and then this higher high immediately made this lower low. So that's my change of character right here. So my change of character would be right here. Um, this would be a lower high. So this let me know that the market want to go in a downtrend. This don't always mean that. So for example, if you want to like wait for extra confirmation, you can wait for it to basically this high to put in a low. So now this is confirming that it want to go in a downtrend. So this would be your confirmation right here. Once they put in this lower low, this is your confirmation to take the sell. So you will basically find a supply zone in this area. You'll find a supply zone in this area and you will basically sell the market. So your entry would be right there at that supply zone, your stop loss at this high, and then your TP at this previous low. So that would be your trade. So when you're looking for your supply and demand zone, you're looking for the last. So let's start with the demand zone. So when you're looking for your demand zone, you're looking for this last down move before this major up move. This let us know that the buyers are in control. The market want to go up. So you will only find a demand zone in a uptrend market. So right here, this is your last down move before this major up move. So when you see this in the market, you're going to put your box on that candle and you're going to drag it over. And it's going to look like that. So the market will basically come back in this area, retest to go higher. So that's where you will want to get in at. You will want to get in right here. The box will be on the top of that demand zone, and then your stop loss will be at the bottom, and then your TP will be at a previous high somewhere over there. Same thing here on the supply zone. You only find this on the downtrend, so you'll wait for the market to come back to this area right here. So this was your last up move before this major down move. So this let us know that the sellers are in control and they want to push the market down. So your entry will go right here at the bottom of your supply zone. Stop loss will go right here at that high, so your lower high. And then your TP will go to a lower low, somewhere down there, and that would be your trade. So let's go back. So now when it comes to order blocks, let me go over that because a lot of people are confused on order blocks and how that works. So a order block is basically previous structure. So let's say the market is right here. We made this higher high, and then we put in a higher low. Okay. So now right here, this is my high. This is my low right here. So this is my high. This is my low. So this low putting this new high. I'll be waiting for the market to come back to this area here to hit this old previous high, and then I would never want it to basically break this low because I'm basically getting in on the retest. So this would be my trade right here. And then I'll be aiming for a previous high. So that is a order block. You just basically looking for your previous structure. So now let's find that on a downtrend. So right here we have a lower low, lower high. So let's say this is our high right here. And then this is our low. So let's say the market putting this low and then it's putting this high. And then this high just make this big move down. I'll be waiting for the market to come back in between this old previous structure to go lower. So this would be my entry right here. Stop loss would be here. And then TP would be somewhere down there. But we don't want to do this on a higher time frame. This is going to be more on like a lower time frame. Because we scalping. Unless you swing trade, you can also do this, but it'll be like a little bit more different. So for example, that's why I made this example. So right here, as y'all can see, you got this low that putting this high putting this low putting this major high. Boom. So right here, you got this last down move before this major up move. This would be your supply zone, right? Well, this would be your demand zone. Cause we looking for an uptrend. So this would be your demand zone. So you'll be looking for the market to come in this area to go higher. So you'll be looking for the market to do something like this. Come here and go higher. And sometimes you might see something like this. So that's basically what I'm finna teach y'all right now. So when it come to order blocks, sometimes y'all might have a zone like this marked up and it might just hit this area like right here and go higher. Why? Because this is your order block right here. I'm gonna just do another zone. So boom, this is your order block. Why is this your order block? Because this is your high and this high putting this low. So boom, this is how it would be. So this is your previous structure. So remember I was just talking about a while ago. So imagine this like a roller coaster. So you have you on a roller coaster in the market, not the market, but basically the ride is going up and then you have that pull down. So basically the ride is going down and then you go up and then you have that pull back. So basically you coming back to retest previous structure right here. This is your previous order block. And since we're in the uptrend, the market should never break this low right here. So this would be your entry here, stop loss here, and then TP somewhere up here, wherever your TP would be, wherever your previous structure or previous high would be. That's where you would aim for. Now, sometimes the market might do something like that, and then it will come back down and then do something like this. That's because that would be considered liquidity. So you got to know when to look for those areas and when not to look for those areas. So you just got to understand and read market structure. And you can do all this and find this on the higher time frame. So that's how you find your that's the difference between order blocks and supply and demand. So order blocks, once again, it's basically previous structure. And then your demand zone would be like this. And then let me go do the supply zone example real quick. So now when you're looking at a supply zone, this is your structure right here. So this right here, this was your last up move before this major down move, letting us know that the sellers are in control, that the market want to go in a downtrend. So this high putting this low putting this high putting this low. So now we'll be looking for the market to come back in this area right here to basically sell off. So boom, boom. So once again, the market might do something like this and then come down. Why did it do that? Because it hit this order block right here. What is a order block again? A order block is simply your previous structure, your previous low. So remember, when we're looking at this right here, this low putting this high and this high putting this low. So where's my previous structure? My previous structure would be this lower low and this lower high. So I'll be waiting for the market to come back and retest between these two. So right here, this is my low that putting this high putting this low. I'm looking for the market to come back and retest in between these. And remember, since we're in a downtrend, it should never break this previous high if the market want to continue going down. So our stop loss will go up here at the top, entry will go right here at the bottom, and then we'll be looking for it to sell off. So once again, the market might do something like this. And then, so it might come back up here and hit this order block, and then it might come back up and do something like this, and then hit that supply zone, and then finally give you something like this. And sometimes that's what it will do in like Asia session, going into like London or New York. So basically, sometimes you'll be basically building up this liquidity, and it'll give you like a breaker structure, change of character, and you be like, oh, it's finna sell off. Was in reality, all it's doing is just basically building up liquidity to basically fake you out. And then once New York come It's basically gonna push up, make a crazy fake move up, and then now it's gonna have you thinking, oh, it's finna go in the uptrend. When in reality, it's just basically coming up to this zone to go lower. So once it give you that change, that's when you get in on the retest. So that's why you gotta be a little bit more patient. So now we're gonna look for these same examples on the chart. So this is actually a good example right here. So as y'all can see, the market was clearly going in a downtrend right here. So right here we're going in a downtrend. So we had this higher high, higher low, higher high, lower low. And as y'all can see, the market started consolidating right here. How do I know that this is consolidation? Because this is my high, this is my low. Anything in between here is what? Consolidation. So now with this right here, look at the market. It started consolidating. It faked everybody out. So now everybody like, oh, we finna sell off. Because what did we do? We broke this low. So now everybody looking for what? Sales. So now the market do what? It come back up like this. It retest this area right here, this order block, and then what did it do? It started consolidating. And then what did we have? So now everybody like, oh, it's finna get ready to buy up. And then it bought up, and then it sold off. And then it sold off right here. And look, it's got everybody again. Remember this? So we trading order blocks. What did I just tell y'all? Where's our previous structure? Our previous structure was right here, our low, and then right here I got to move this down. So right here, this is our new high. So instead of this here, this is our new high. Why? Because this is our new high that made this low right here. So now we'll be looking for the market to come back up and retest this area, and it should never break this right here. But look at this, y'all. What did the market do? It created liquidity. But what did it do? It came back and retested this order block. And then what did it do? It put in a lower low. So it faked everybody out. And then what did it do? It came all the way up, hit a supply zone, and went lower. That's why patient pays. I'm not saying you can't make money from these areas, but why take this trade when you could take this trade? Why get a little money when you can get a lot of money? So this is a quality trade. This is a quantity trade. You got to remember, we get paid to wait. All you got to do is wait. Why trade in this choppy market when you can just wait for a clear market? So for example, if we was to scale down, this is a clear indication right here. So as you can see, let me delete some of this stuff. That way I won't confuse anybody. So the market was clearly going up, higher high, higher low, higher high, lower low. Now we can get in here. So breaker structure here, change the character. We can get in here. Let's say none of this makes sense to us. We don't know, like, well, where would you get your entry? If you don't know where you will get your entry, don't worry about it. Just be patient and wait for your setup to come to you. So look, wait for it to give you a breaker structure. Breaker structure. What did we do? We got a breaker structure. Now we wait for the market to come back and what? Hit this supply zone to go lower. So now, before I do anything, this is my new high right here. This is my what? My new low. Why is this my new low? Because right here, this is my high, this is my low, this is my high, so this is my low. So now this will be my high right here. Matter of fact, let me just go ahead and do it real quick. That way I won't confuse anybody. So this would be my high right here. This would be my low. Then the market putting this new high. So now this is my new trading range from this high to this low. And then this high putting this low right here. So now this low go right here to the bottom of this green candle. And then this high, boom, this is my new trading range. Nothing else is important. And then none of this stuff happened yet. So don't focus on none of this. So now I wait for the market to break this area. So again, if you don't know where to get in at, do not try to force anything. Wait to You see something that's familiar and makes sense to you. So now we have this huge drop. So now this is my new what? Low, and this is my new high. So now we got a breaker structure to the downside. All I'm doing is waiting for the market to come back up, hit this order block, and go lower. So now what you want to do is, if we swing trading or scalping, but mostly scalping, um well, swing trading I mean, because when you scalping, usually when you hit this zone, it's just gonna drop. And you can't go no lower because you already on the lower time frame. But if you swing trading, what you want to do is go refine this zone. Refining this zone is basically, instead of having this zone as big as it is like right now, you can go up and make this zone smaller. So now, as you can see, this was my whole area. So from this low to this high. So now, since I refined this area, this is my last up move for this major down move. So I would just continue going down. Let me see, continue. And let me see, continue going down real quick. So the reason I'm making this zone smaller is because this zone right here, as you can see, already been mitigated. So right here, as you can see, the market broke out and it kind of already came back to retest this area. So this is a mitigated zone, meaning this zone is not strong enough. So that's why I preach we only trade mitigated zones. Now look, right here from this last up move for this down move, what do y'all see? The market clearly already retested this area. So this zone is what? Mitigated. We're looking for a zone that have not been mitigated. So I can really move this here. But for the people that don't know why I'm putting it here, I'm gonna go to a lower time frame. So as you can see, if I go down to like a smaller time frame, you'll see even more. But basically, if I go down to a smaller time frame, it'll be like one candle here. It'll be like one last up move for this major down move. So now you can put your entry here. You can get in like this, and you can hold to this low like this. And that would be your trade. That would be your trade like that. And then let's say you want to wait on extra confirmation. So you could, whatever I'm doing on the higher time frame, you could do on the lower time frame. So as you can see, the market is clearly going in an uptrend. This low putting this high putting this low putting this high, higher low, higher high. So remember, if we in a uptrend, it's only make higher highs and higher lows. So if it do anything outside of making higher highs and higher lows, it's a possibility that the market want to do what? Go the opposite way. So now this high automatically push down like this. So anytime you see the market putting a new high or a new low and it automatic reverse and give you a change of character, that's an indication that the market most likely want to go to the opposite side. So even right here, this was a low, that putting this high putting this low. Change of character, what did the market do? Come back to retest and went lower. Same thing right here, higher high, higher low, higher high, lower low. Came back to retest this supply zone to go lower. So we scalping. This is your unmitigated zone right here. So yes, this will be a candle right here too. Your last up move for this major down move. So yes, you can do that one, but the reason I picked this green one right here is because this zone haven't been mitigated. So basically what I do is, so this is your last up move before this major down move. Look at this. The market already broke outside this box and it already came back to retest, right? So this means this zone has been mitigated. What is my next area? My next area will be here. Why? Because this low putting this high putting this low putting this high putting this low. So we go to a smaller time frame, you will have more candles and you will see why this is your high, this is your low right here. And that one candle, because this is the 15-minute candle. So we'll just go on the 5-minute. This candle right here will have 3 5-minute candles. Right here, as you see, what did the market do? It broke out and then it came back to what? Retest. So now the next area will be what? This area. So what this is called is refining your zone. So instead of having that zone bigger, you're making it smaller. Why? Because, for example, if I wanted to take the trade from like right here, look at my stop loss. This is a big stop loss. So let's see how much I would make if I held it all the way down like this. I would still make a good amount. That would be a 1 of 4. But look at the difference. So now when I refine my zone, look at the difference. So now when I move it up here, look at how much I would make just by making this, by changing this one simple thing. Look at the difference. So now I can make a 1 of 15 instead of making a 1 to 4. So this is what you call a order block, or you can call it a supply or demand zone. Basically, they the exact same thing. The only difference is a order block is your last. It's basically your structure. So it's like this right here was your low. This low putting this high. So this would be your internal structure. And then this high putting this low right here. So you'll be looking for the market to come back. As y'all see, it never came back. So that's why I chose that zone. And boom, the market just went down like that. So on this video today, I went over a few different things. I went over, let's see, let's go back down. So I went over quite a few things. Let me delete some of this stuff. So I went back over the basics because, like I said, a lot of people still confused, which I don't know why. Because, like I said, I don't do anything crazy or difficult. It's only market structure to tell you if the market want to go up, down, or if it's consolidating. Secondly, I teach supply and demand. Um, Supply is basically when the market is going down. That means the sellers are in control. Um, so you're looking for the market to come back up to go lower. And then in a demand zone, that is what you would find in a uptrend. It is when a market is making its last down move and pushing the market up aggressively. Um, and then lastly, I went over trading ranges to understand like, okay, I'm in this area. I only need to pay attention to this certain area. I don't need to pay attention to nothing else. So focus on where the market just gave you that change of character. Stop focusing on everything else. And also, when you're doing your higher time frame. So for example, let's say I'm gonna go over this one last thing before I stop the video. So as y'all know, we trade at like 7 in the morning. So boom. Well, no, we trade at 6:30. But it really don't matter what time you trade it. So let's say we trade at 7 for whatever reason, or 6:30. It really don't matter. But this is how y'all would look at the market, because a lot of y'all still be confused on like what area y'all should be looking at. So for example, don't worry about none of this because the market is not over here. The market is right here. So when you're doing your top-down analysis, go to wherever the market at. So for example, if we was to open our chart, the market would be right here. Why? Because this is the exact time we trade, 7 o'clock. We trade here. So when we do our top-down analysis, this is how we will look at the market. Where is the market at now? It's here. Okay, how did we get here? In order to know how we got here, we need to go where? Here. Why? Because in order to know how we got here, you got to go back left. So it's just like reading a book. You read a book left to right, not right to left. So, do any of this make sense to you? Why did the market come to this area? Oh, clearly we don't know why. So, what do we need to do? Go to a time frame that makes sense. And that's a lot of y'all problems. Y'all be trying to force things that don't make sense. Y'all would just mark up this area and you're like, oh, well, I had this marked up. And then, okay, why did you have that marked up? You don't know why. Go to a time frame that makes sense. And let's see why did it come to that zone. Do this make sense? No. Okay, let's go to a time frame that makes sense. Do this make sense? No. Do this make sense? No. Let's drag this over a little bit. Do this make sense? No. So right here, what do we have, guys? What do we have? We have a what? Last down move before this major up move. And look at the market. It never came back to retest. So that's what I was telling y'all earlier. So right here, you got the order blocks. So right here was your high that putting this low putting this high. It came back to retest between this high and this low. So it actually came back to retest and then it went higher, but it never came back to retest this. But guess what? It did in the future. So we come over here, it came back over here and retested later on. So it actually did come over here and retest. So you got this zone, and then y'all also got this imbalance right here. So y'all got two zones right here. So when you're doing your top-down analysis, y'all will mark up both of these zones. So both of these zones will be marked up. Imbalance. Let me go over that real quick. An imbalance is basically when the market leave a gap. So right here, as y'all can see, the market clearly left this gap. This was your last down move before this major up move. And then it left this gap right here. So basically how you would draw it would be 1, 2, 3. You would draw your candle from that third candle and then right here to your first candle. So this is your gap. And as you can see, the market came back down, filled it, and went up. So guess what? Since this is already mitigated, we trade unmitigated what imbalances too. Or some people call them fair value gap. They're the exact same thing. So now since this been mitigated, the exact same way we did supply and demand earlier when we was refining our zone, we do that same exact thing right here. So now we will drag this down to here. See? Now look, this is your mini gap right here. So the market need to come and fill this gap. So let's drag it over. Look, the market came and filled this gap. So when we go to a lower time frame, first let's go ahead and start from the higher time frame, because we need to see and understand why the market came and did what it did, but also see where the market going. So that's a lot of things that a lot of people mess up on too. You got to understand where the market going and why it's going that way. Okay, so we hit this zone. Where should we be aiming for? Okay, let's go to a time frame that make the most sense. So right here, as y'all can see, this is my previous structure, and we found this on the daily. If you don't want to go that high, you can always go to a time frame that make the most sense. So let's say, boom, right here, this is your last up move before this major down move. So we'll be looking for the market to come back in this area to sell off. This will be my supply zone. So we go down, boom, as you can see, this is your last up move. You see this is already been mitigated. So what do we need to do? We need to what? Refine this zone. So now we'll move this up to the body. If you don't understand why I put that there, go to the time frame that make the most sense. So basically, you would do this area. I'm not gonna go into like too much detail, but the lower you go, you eventually find a zone in that area, and you understand why this market came all the way right here. So boom. Now we go to a lower time frame. We just did our top-down analysis. We understand why the market came here and why it's going up, and now we understand why it's trying to go up, or but not where, why it's trying to go, but where it's trying to go. So we understand the market is trying to go here to sell off. So now since we know that, let's go to the lower time frame. So now, since we did our top-down analysis, we just stick to our steps. So now, as y'all can see, this low putting this high putting this low. So remember, this is my trading range right here from this low to this high. Now this high right here broke this low. So where's my new trading range? From this low to this high. This is my new trading range. Now this low right here putting this high. Where's my trading range now? From this high to this low. This is the only thing that's important, nothing else. And remember, this stuff haven't happened yet, so don't look at this. Don't focus on this. So now it's just from this high to this low. So now this high put in what? A new low. So now what? So now this low putting this new high. Where's my new trading range? From this high to this low, right? So now I'd be looking for the market to come back here to go higher. So this is me doing my top-down analysis. Remember, none of this is our trading time. Our trading time happened over here. So we trade at like 6:30. So our trading time would be right here. But look at the market. The market is what? Consolidating. So that means we're not taking no trades yet. So we got to wait for the market to present itself. So now since we know we're looking for buys, we'll be looking for the market to come back to this area and here. So I know y'all probably like, why did you choose that area? We just went over order block, guys. We just went over order block. Stay with me. Stay with me. So this is your high. This is your low. High, low. It broke out, retested. This is not valid. Let's go to the next zone. What is the next zone? This is my what? New high right here. So bring this down. Boom. So if the market continue what? Selling, what do? We move this lower. What is the next zone? Right here. It's here. So if the market keeps selling, what is the next zone? It's here. And if it break this, what is our next zone? It's here. And you can do like this gap from here all the way to this low, or you can do this whole area right here, and then you can do this last zone right here. But yeah, I'm going off this order block, and then if it disrespect this order block, I just continue moving it down. That's it. That's all I'm doing. So, okay. So as y'all can see, the market was clearly in a what? Consolidation. So this is what I went over what earlier. The market will what? Consolidate for a minute, confuse everybody. I just went over this. It would basically be coming in from Asia, going into London, and then it would basically do all this crazy stuff to fake you out. So now it'll basically come from a down. Well, we know we in the uptrend. We know that. And then we start going in a what? We start consolidating. And then what did we do? We faked like we were finna go for a buy because we already know we in a buy, and everybody else know that. Why? Because that's what market structure tell us right here. So since everybody know that, they finna make everybody think that the market finna go up. And when you think it's finna go up, you're gonna be like, oh, I can get in right here. This is what most people did. They seen this breakout, they got in here, and they thought the market was gonna go up. And guess what happened? Jokes on them, they got stopped out. That's why you got to be patient. You got to understand where you at and what the market trying to do. So you wait for all of this to break out. So remember, in order for this to be a breaker structure, you need the market to what? Close. This is a wick. A wick means the market have not confirmed it want to go up or down yet. So all of this is what? Considered still consolidation. Boom. All of this is consolidation. Then look, we had a push up. So look, even this right here is nothing. Why? Because it never broke this high. You see how it basically came with that wick? That's nothing. That's why I just told y'all right here. That's nothing. We gotta wait for the market to break out. Where did the market break out? It broke out here. So this is our high. The market is what? Confirming that they want to buy. And where did we get the confirmation for the buy? Well, we got the confirmation for the buy all the way over here. When we got this change of character. Boom. We got this change of character right here. So we already know that the market want to go up because this is our external structure right here. So now since we got this right here, we'll wait for the market to come back right here and retest this zone right here. So this was our change right here, this candle. So now we'll wait for the market to retest in this area to go higher. And your first TP, of course, will be your previous high. And since we did our top-down analysis, we already know that the market want to go where? Up here. Boom. That's our TP. And just like that, you would have made it back. So this is what I mean when I say wait. So when you understand what the market is doing in the morning, it do this literally all the time. So you just got to understand the market cycles, understand the where we at in the morning, like have it already did the consolidation, accumulation, and stuff like that. Accumulation is just basically consolidation. So it's accumulation, manipulation, and then distribution. So that's just basically another form of like market structure. But basically, I'm not gonna teach all about that because I don't want to confuse nobody. But basically, market structure was clearly showing consolidation, consolidation, consolidation. Now I want to break out to the upside, wait for the market to come back and retest, and then boom, to go lower. So it's that easy, guys. I need y'all to stop trying to complicate it and literally just stick to what I'm teaching y'all. Market structure, as y'all seen, was going in the uptrend, and then right here, my demand zone. So yeah, that's it.